Welcome everyone to another edition of the weekly meetup. Special event tonight. I am back. This is my first presentation in a very long time on a weekly meetup. Dario Health, DRIO, was a stock I presented long ago, probably almost a year ago, and got lots of updates. So I wanted to organize it and get it out to you tonight in a formal presentation. First, a quick disclaimer. StoryTrading is not an investment advisor. I am not an investment advisor. Any recommendations I make today are for entertainment purposes only. Investing in securities involves significant risk of loss, and this event is being recorded. So Dario Health, I brought it up to the StoryTrading community at around $7 before we had our VIP presentations. That was way back in the COVID trading lounge. It was presented as kind of a COVID play back then when digital health was picking up and real hot. At $7, the catalyst, I just had a bunch of digital health stocks in my watch list, and Dario came up on thread as having raised a lot of money at a price over where it was trading, above market offering. This is like a tiny micro cap at a time. It was like a $30 million micro cap or something, or 50 million. They did an above market offering with no warrants. And I'm like, dude, that's a sign. I just like piled in as much money as I could at $7. Turned out to be the right move. And I later presented it as a VIP pick when it was $12.40. In addition, over the past year, we've had management come on many different times. We've had the CEO on a few times. We've had Rick Anderson, the head of North American sales, on a couple times. We had a product presentation from the product team. So I would like to think that I know this company inside and out, and hopefully what I have to say is coming from a place of knowledge. So let's move on. All right, so first of what I want to do is go over Q1 earnings. I had forecasted 4.9 million. I've calculated 4.9 million for a Q1 revenue, and it was a miss, but it wasn't such a terrible thing. What really happened, and I wasn't the only one. If you listen to the call, there were a number of analysts that were confused about what happened there. What happened was the recent acquisition of Upright, that's the musculoskeletal company, MSK. Their revenue was seasonal. So when they gave the annual revenue number after the acquisition, and they forecasted like sequential growth, they failed to mention that it was a seasonal business, and a very large disproportionate amount of sales was November through December, because these are first you buy the device, you put it on your back to keep your posture straight. And then after that, there's a monthly plan. So the device purchases November, December, for the holidays, and then January for New Year's resolutions. So none of that got factored in because the acquisition closed February 1st. So that's why a miss on the top line. So once that was explained on the call, stock started reacting a little bit better. The initial response was down because of that miss on the top line. The organic growth was in line. They guided for 10% growth, and it looks like it did grow at 10 to 15% for their legacy business, the diabetes stuff, diabetes and hypertension. So, and what's really interesting is I think they reported 3.6 million in Q1, but they said they're currently at a run rate of over 5 million. So not only did they, they're basically meeting my 4.9 million in Q1 if they didn't have that seasonality, but they're saying Q2 is already going to be over 5 million. And that doesn't even include the acquisition they just made, 2 bullets down. So also the pipeline grew to 700 million. And so they did another acquisition, which they had hinted at pretty strongly. And they did hint it would be they would use their stock as a currency for future acquisitions. And there was also a lot of speculation was going to be mental health. So in a lot of ways, it was not a surprise. What was a surprise was the timing that happened so fast after Upright. And also the terms were incredible. This was a mostly stock deal calculated at $21 a share when the stock was trading at 14. And this is not the first time the company's done this. They've consistently sold shares above market without warrants. And that's just like another time they did that. And it just like blew me away right there. So this customer, this acquisition, they have 20,000 customers, 20 employer customers, which is very significant because those are the employers they can now cross-sell and sell their other products to in 2022. Also, apparently, a lot of the contracts this Way Forward has kick in for starting January 1st, 2022. So now they talk about the large health plan that has been promised for a long time. So they said it will close this quarter, but bunch of caveats. I have a whole slide. I'm going to get into that in a second. They've been forecasting this for quite a while that it's going to come very soon. Okay, so just keep that as a note right now. They're saying this quarter, and it's going to contribute meaningfully to revenue in second half. 81 million cash, no debt, 280 market cap. We have a couple line charts to show what that looks like. Steven. Yeah. So this is the quarterly revenue chart, right? So you can see revenues doing quite well here. And not only is this most recent tick at 3.59 million, but they're already on a run rate of over 5 million for Q2. So this is like exponentially growing. Some of it's through acquisition, but they said for all of their legacy, their core business is also, and not only the core business, but also the MSK, the upright, that's also growing at 10 to 15%. Basically, all segments of their business are growing at 10 to 15% sequentially. So that's not only because of acquisitions. So that's the revenue chart. And what I like is when you look at the next chart, look at their cash. This is from the favorable acquisitions they've been able to do. Their cash balance is exploding. So they're not anywhere near profitability yet, but their revenue is growing so fast and they're getting an increasingly larger war chest as their revenue is growing because they're taking advantage of doing great deals on the public market. So those two together starts to hint towards the possibility of a huge company in the making. Let's go to the next slide. So what I did, I had a call with CEO Erez Raphael the next day after earnings, and he gave me a couple additional insights and nuggets here. When he said over 5 million run rate in Q2, he told me on privately that they're shooting for 5.5 to 6 million. So that'll be cool. We'll see what happens there. I think I have, oh yeah, here we go. I got my hand on a Cohen report, Stifel, and Cantor Fitzgerald. So they were at Cantor's at 5.6 million, right? So they're forecasting that. He told me Cohen at 4.6 million. He says like a joke, and they're going to kill the Cohen numbers. Also, Cohen's numbers on the acquisition, the way forward. He said that's also a joke. I think they put in something like 850,000 for 2021. And Erez told me the run rate for the new acquisition is about 2 million for 2021 and 6 to 7 million for 2022. A little bit about this because there's a little confusion. They have 20,000 members, and Rick Anderson on the call, he said that it's like immaterial to 2021, and that it's really going to be more relevant. It's going to be more relevant in 2022 with all of those 20 employer customers. The revenue will really start ramping. So I guess that was just a qualitative. That was just his perspective of what's material and what's not. So I guess he thought 2 million wasn't material, but I think it is. And I think Erez cleared that up. He said that, Rick may have misspoke about that it wasn't material. So we're talking about 2 million ramping up to 6 to 7 million in 2022. And how that works is they have 20,000 customers. Their legacy business model was about $2 to $3 a month. And their new business model is $15 a month. I think the ones that are ramping up with the employers. So if you do the math on that, it's close to 2 million. So these are the correct numbers and not what Cowen has. And I think even Stifel and Cantor Fitzgerald may have some lower numbers for the new acquisition. So I have a bunch of other interesting tidbits from the management call. All right, catalyst. So that was the fundamental. I organized this by the 4 pillars: fundamentals, catalyst, sentiment, and technical. So going to catalyst, got lots of nice little insights from the CEO here. Now, they've been saying, look out the next 2 to 3 weeks for either a large insurer or 1 to 3, a few important deals. They've been saying that for a long time, right? So he's saying that again. But this time, there's so many puzzle pieces here that I think it's actually happening. So what are these puzzle pieces I'm looking at? First of all, they have not shifted the timeline in at least 1 quarter now, right? So it kept on getting pushed back. I talked to Rick Anderson after the Q4 call, And Rick was telling me they're going to close this in Q2, the large insurer, and that second half revenue is going to kick up, this year. And Erez was telling me the same thing, the same story, right? So that inspires confidence that they didn't hedge on that. Also, just the confidence level and the tone expressed by both Rick and Erez, both publicly and privately. This is the most concrete and solid I've ever heard them in terms of definitive impact on revenue in the second half of the year. They're being very, very specific to the point where Erez is predicting hockey stick growth in revenue in Q4. That's the word he used on the call for me. He's looking for hockey stick growth in Q4. Also, I asked him, hey, come back to StoryTrading, do a Zoom call. And he's like, well, why don't we wait 2 to 3 weeks? Maybe we'll have something more to talk about then. So again, that's not, like inside information because he's always saying 2 to 3 weeks, but just interpreting the tone of that, combined with these other things, I just take it way more seriously this time. Also, I alluded to this earlier, but the $21 a share to do this acquisition when the stock was at $14, the acquired company tried to negotiate that because the market did poorly lately. They said, instead of taking a 60-day VWAP, let's do the 30-day to get a better price. And Dario wouldn't budge, and he was able to get the deal. And he targeted the 60-day was kind of not fabricated, but it was engineered so that the price would be around $21 because that was the last offering. Very large offering was at $21. And Erez is like, he knows the value of this company. Everyone who's buying shares into it knows what's going on, knows about this hockey stick growth that's going to happen once these insurers come on board. So there's no way he's going to sell shares at 14. 21's the price, sticking with a 60-day VWAP. So I put all those together, and I just feel more confident than ever that this time is different. That when he says 2 to 3 weeks, I think it's going to be 2 to 3 weeks. So I think I put a little disclaimer there at the bottom that they've said this before. So it may not be material, but I'm just putting a picture together. All right, a few bonuses from the management call is, I asked them, how do you pulling off these, these great terms? I've never seen a microcap consistently do raises above market with no warrants. I mean, I'm living in a parallel universe. What's going on here? And basically he's like, well, the stakeholders know. They know what's up. They know what's coming. And that's how I'm able to get these great prices. So, he also told me, these are all kind of random thoughts, but some of them are pretty intriguing. Said no more immediate acquisitions on the horizon. They need 4 to 5 months to digest these 2 acquisitions. In terms of branding, they're going to go, they mentioned this on the call, that they're going to go separate apps. It wasn't clear if there's going to be 2 or 3 or eventually merge into 1, but basically they said their strategy is to go 3 separate apps, one for MSK, one for metabolic, one for mental health. They'll all be branded as Dario, and they'll all work with each other interchangeably and open the other app when needed. I'm not sure exactly why he went with this strategy. He did mention his experience at a company called Amdocs, which is DOX on the NASDAQ. He said he was an integral part of some software development over there and is drawing on his experience there. That had something to do with how they came up with this strategy. But all right, another very interesting insights. Teladoc, we talked about Teladoc and Livongo. So on the next slide, don't go there yet, Stephen. We'll show a little slide about the positioning between Dario and Teladoc, but really this is about Livongo because Teladoc has done very poorly lately. The last quarter is blamed on Livongo growth slowing down and coming in under expectations. So why is that? Erez says they have a lot of intelligence within Teladoc through interviews they do and through new hires from Livongo. He said they've lost a lot of key people from Livongo. They've hired 2 people themselves from Livongo. He says the people from Livongo no longer, have the itch and they're not motivated anymore. They're already cashed out, right? So these all play into why Teladoc had that miss and the Livongo integration is not going great. So in any case, I asked him also, what's your strategy here? It looked like, a year ago you were looking for a quick flip and to, sell the company for, I don't know, a nice amount of money, but it looks like you're building a platform here. Like Livongo's not doing great at this point. Teladoc is not doing great. what are you trying to become? What kind of platform are you building? You're trying to, be on the level of Teladoc. So he basically said, no, I don't want to flip anymore. I got the appetite to keep going. I'm enjoying building shareholder value. I think I can get this to a $2 to $3 billion market cap. And then at that point, maybe we sell, or maybe we get a CEO to take this to $10 billion. He thinks it's ridiculous that the stock is below 30. He thinks the stock should be at least in the 30s. And his intermediate term goal is to get this to $100 a share. He did say once the stock price gets into the 30s, they may do an offering, not because they need the money, but just to strengthen the balance sheet and help make a really large company. And I guess with that kind of money, they'd probably do more acquisitions or something at some point. I don't know. Anyway, Steven? Okay, so this was when I talked about the whole Teladoc and their stock price not doing well recently. So he said this is a very important slide in terms of their positioning of their company and how they're differentiated from Teladoc. He tells me telemedicine is commoditized with low margins, and what they're doing is digital therapeutics platform, which has very high margins. I don't fully understand this part of it, this slide. Later when my presentation finishes, if anyone wants to give further comment or insights into this differentiation, the positioning versus Teladoc, I'd appreciate that. But this is where he sees their value as opposed to Teladoc, and why he thinks they're in a position to become a very large company. Okay, let's go to sentiment, the fourth pillar. Sector sentiment is poor right now. It's poor because it's post-COVID. Some people saw this as a COVID play. It's poor because Teladoc performance has been very poor. However, on a company level, I think sentiment is extremely high right now. I'm seeing a lot of momentum on social media, influencers, analysts picking up on the story right now. A lot of disappointed people over at Teladoc that looking for a home for their money. I think a lot of that money has already gone to Dario in the last week. You see Hedgeye coming out saying, oh, there it is. Well, before I go, I got next to Longo. We see Hedgeye coming out saying there's a $30 price target, defensible path to 100. Basically, all of the analyst reports I looked at had price targets with a 3 handle. So everyone's basically saying this is worth 3+, and Hedgeye coming out saying defensible path to 100. So I think that the company sentiment is good because people want a place for a home for their money, and they're a little disappointed with Teladoc Livongo, and there appears to be very strong momentum at Dario. Also, looking at the analyst reports, actually this one came from Yahoo. I have my hands on those 3 reports I mentioned before, but these blended 5 I found on Yahoo, the average is calling for 100% growth between 2021 and 2022, over 100% growth to 45 million revenue. So now looking at the 4 pillars combined in summary, Stephen. Oh no, technicals, I'm sorry. Okay, so let me move this around a little bit. So technicals are not superb when looked at their own. There's a couple indicators not on here I look at, MACD, RSI. I think there's a couple positive indicators on the MACD and RSI, but there's a lot of resistance here, a lot of moving averages, a lot of congestion it's trying to get through right now. It's got to go a few bucks higher to break through that, get into another channel. So technicals, it didn't make it yet. But again, some positive indicators of MACD and RSI, my interpretation. So in summary, I'm going to rate those pillars for you. I got a 5 on fundamentals, 5 on catalyst, sentiment of 4. Again, because I think the strong sentiment of that rotation possibly from Teladoc into Dario. Technicals a 3, it's just not there yet. But in this case, so if you blend it, that comes to 85%, 17 out of 20. But in this case, I really believe the fundamentals and the catalysts will overcome the technicals, and we can break through all those barriers. But the question is when, right? How soon are they going to announce this large insurer? And if it doesn't happen soon enough, people will get impatient. They'll start selling their position. It's not going to break resistance, right? So they do need that catalyst to come through. But I think it's noteworthy to remember that even without this additional deal, they're growing organically at 10 to 15% sequentially every quarter. And remember that 700 million pipeline, I think I failed to mention earlier, they're looking at a 10 to 15% annual close rate on that pipeline. So there's lots of opportunities here to grow into this valuation, even if they don't get this large insurer. I think getting this large insurer all of a sudden takes it into the next level. I think it will be a number of days to get to 30 plus, if and when they announce that. Or maybe it gets there even before a number of days. We'll have to see. So anyway, that's my summary on those 4 pillars. So with that, what I want to do is before the Q&A, we're going to turn it over you can stop the screen share, Stephen, and turn it over to Rob to drill me on this and play the role of the, what do we call it? The skeptic. Right. I've been playing that role for the last few weeks, and I've really enjoyed it, actually. I've gotten good feedback on it, so I want to keep it going. So, Rob, hit me with it.
I worked in the for a long time, so this will be fun. But kind of a company. So the delayed large insurer, when was that originally called? When Erez believed that insurer would come through?
Yeah, I think they first started talking about this at the end of Q2. I think it was in Q3 last year, right? So we're talking about at least 3 quarters. So they definitely missed the ball, and they acknowledge that this is taking longer than they anticipated. So I think that's about the timing, at least 3 quarters of unanticipated delays so far.
Because I remember then Erez was like really confident. He's very believable.
Yeah.
It'd be almost because you're talking about the raise where they raised a lot of the overvalue. So did the acquisition overvalue. It's possible that he's just this man convince people of things, a good deal based on risk in the industry of products he's building.
I mean, yeah, well, I guess anything is possible. It's fooling a lot of people. I mean, this is institutional money coming in. The last couple of raises was big money. I think the most of that went to a company, Perceptive. I don't know the funds myself, but I heard that these are very high quality funds that have been investing in the offerings. So it's possible he just puts on a great show and a great presentation, and is not only getting the investors, but is getting the companies they're buying, to sell shares at great valuations. That's possible. Yeah, I mean, you bring up a good point. And I think that's why the stock is where it's at. If the market believed that this deal was going to close, it wouldn't be at $17 now. It'd be at $30 right now.
Yep.
So I think there's a lot of doubters there. And if and when it is announced, that's why I think we'll quickly get to the $30 range.
It's definitely much harder to trick institutional investors and companies you're acquiring. So it's less likely. It's more likely the company. It's just being of higher value. And then some of the revenue has been from acquisition. That is a negative or a positive, that they made the acquisition instead of kind of like pushing for more deals with their larger force in the diabetes space.
Yeah, that's a good point. I think that they've made commentary in the last few quarters throughout these acquisitions that basically I think they feel the need to offer multiple disease states in order to win some of these larger contracts. Like, I think they basically said that outright, that when they go and they try to sell this to employers or insurers, that they want to see multiple disease. This is what they're claiming. That they want to see multiple disease states. So by doing these acquisitions, it makes them a lot more attractive and makes it a lot easier to win these deals. That's their claim. I don't know if it's true, but that's I'm comforted by the fact that their legacy business has been growing at 10 to 15% sequentially. So, because a skeptic there could say that they're doing this to cover up poor performance in their core business.
Yeah.
But it's a good point you brought up.
The next one is they were in medical devices and they're switching over to app-related products. Say medical devices, it's competitive, but not as competitive. they actually need to do what you just said. They need to get a lot of different types of diseases under one roof to stay ahead, because there's a lot of app developers out there that could build similar apps quickly. And how do you think Dario could stay ahead of other app developers for like management of diabetes, other disease?
Yeah, I did ask him about devices, and he said devices are still a part of their strategy. So it's not all digital. So they have so right now they have the diabetes device, they have a hypertension device, a blood pressure cuff. They have now the MSK device on your back, and he did tell me that they're committed to the device area and they're going to do more devices, and also reiterating that their plan is to become device agnostic. Right now these are their own proprietary devices, so I think he's envisioning, some sort of platform that allows them to be compatible with other people's devices. um, but that's a good question because I don't have full clarity on that. One of the things that I think I'm getting more clarity on, because I did talk to him about the devices at Biotricity. I'm a shareholder in Biotricity, thanks to Aaron's presentation there. They do the EKG monitoring, like a Holter monitor type thing. DermTech, I'm a shareholder in, which does the home testing, or it could be an office testing for skin cancer patch, right? So, in between quarters, I'd reached out to Erez and asked them, hey, are these potential partners? So I didn't get clarity in this area that they're not looking to do anything that requires uh, a, a prescription, right? So this is their niche is basically chronic disease management. It's something patients do on their own with artificial intelligence and coaches, right? That's the market they're going after. So anything that requires a consultation with a physician in order to write a prescription, that's not the area they're playing in. So that, in terms of devices, there's certain devices they're not going to touch or go near. It's about this self management of chronic disease states is the area they're playing in.
So that was all my skeptic questions, but I do have one comment on that slide that you brought on consumerization of healthcare.
Yeah.
So
Let's
as
actually here.
yeah, if you want to pull that up.
Yeah, he specifically called out this slide in the deck, and he said this is a very important slide to understand basically where we're going and how we're positioned against Teladoc.
So it's actually, I was working with a team of people like 3 years ago, and we were thinking about making a company called Healthy Living, and it would help people manage and look into their own healthcare problems. Because we were finding like a lot of people, doctors, and they would never pinpoint exactly what was wrong with them, and they ended up managing their own problems or possibly taking pills forever. But long story short, we came to the conclusion that a lot more people should like be stakeholders, look into their own problem, manage their own healthcare, and not just take pills unless they had to. So I do see what they're trying to build is like an evolution of healthcare and like going in the right direction. And I do see this as like valuable to insurers, because if people manage their own healthcare, it reduces healthcare costs dramatically, which increases the chances that they land large care insurance. But it's also like kind of ahead of its time, and it's like the way we're going. So
Mm. Yeah, I
nice.
appreciate.
It'd be nice to listen to Erez and like see what his vision on this is and how he sees it. But
Yeah, I appreciate that color. Yeah, that'll be a good topic to talk about when we bring him on. One area I had a little bit of doubt in when he was starting to talk to me about the future of like the app they just bought, the mental health. And he was saying that it's all about, well, there's coaches now, but he said, their program and it's all about artificial intelligence. That's what he keeps saying is, that they have this great algorithm or whatever that is able to suggest people what they should do to take care of themselves, right? It's all about artificial. So maybe I see that working in diabetes, but he was talking about that in mental health. I'm like, I can't imagine how artificial intelligence coach is going to help someone through a mental, psychology issue. Like, I don't get how
That
that would
does
work.
sound strange.
Right. So like when I think about margins for that business longer term, I'm like, is that really going to work? Or are they going to have these coaches, which will be lower margins? So that was one thing that I was a little bit skeptical about.
Yeah, some companies that use those words, it's not maybe 9 out of 10 times they're just trying to impress to like win over shareholders,
Yeah.
but it's a
So
possibility.
cool. Um, yeah. So with that, I guess we can open questions.
Is everyone able to unmute themselves or are they muted?
No, yeah, they're muted for the call. Just raise your hand or put it in chat. Actually, I can see that some of the chats from Florian. So, um, they don't have 14 it would have been selling, which just seems right. Yeah. So he's talking about how important is that $21 share price for that transaction that was just done. Um, yeah, I mean, you could say they overpaid, so it was a great deal anyway for those guys. I guess you could make that argument, but I think what happened was it took time for that deal to close, and I think I don't know. I just think that the market went down, right? All the growth stocks went down. This one went down to 14, and they had no. They were basic. They I don't know. They still they were still willing to do the deal at 21. Like in terms of leverage or whatever, they I don't know. I just feel like I've never seen it before. That's what I'm getting at. Right? I don't think I've ever in my life seen a transaction that was that high over market. And I think Mark Gomes even mentioned he's never seen a 60-day VWAP, right? And that was an artificially chosen number in order to artificially create the $21 because he didn't want to go below the last offering. To me, I think that says something. At least it says they're they're looking at dilution and they're investors and they want to keep their investors happy and they're trying to do as good deals as they possibly can. I guess it could have been very easy for Eris to say, okay, you're right. I mean, look where the stock is the last 30 days. We got to do it lower, right? He could have caved, but he didn't. So I do think it means something. I significantly increased my position here in the past week. Basically been buying almost every day since I had that call with Eris last week. It was my largest position. Now it's probably 30 to 40% larger than it was last week, um, excluding the price appreciation. Right, I increased my shares about 30 to 40%. I'm not doing any calls. Right, the timing it hasn't worked out historically. This 2 to 3 weeks or whatever. So just be careful. I checked out the calls too. Very expensive, very illiquid. Um, but I just feel that I go back to these two charts. Like, how can you look at this and not feel that this company is at an inflection point, right? They have a war chest. They're growing the revenue extremely rapidly, and then you put that against the stock chart, and I have very high confidence. Again, if they do announce that insurer, we're talking about $30 quickly, maybe. Um, I'm looking for $50 to $100 in 2022, maybe more, maybe up to 150, depending on because there are multiple health insurers in the pipeline. So we have to see how that plays out. Maybe look at some other insurers, and then you can be talking about $100 to $150 stock potentially. Um, but yeah, that's what I'm doing. I'm just buying common stock and my largest position. So let's collaborate in the Dario research group. If you don't have the link to it, we'll drop it in there later. Would love to hear from skeptics along the way as we participate in this story here with Dario to make sure that we're not missing anything. So yeah, just real quick as a reminder, for those of you who are watching the video replay, you can go to storytrading.com, click on performance, check out the performance of VIP picks, and you can click on events there to see our upcoming events. Follow us on YouTube and Twitter at StoryTrading for other updates. And with that, we're going to cut off the recording and go to our trade of the week. Thank you, everyone.